All right, so welcome to the India market review for 24th of August. It's just going to be one of those free-flowing ones, not really having a plan for exactly what we're going to discuss. But well, the reason for this unscheduled one is the market rout that we have had in the Nifty today, and the Nifty is down 490 points, about 5%. And on very good volumes, as you can see. uh, just to put a few other perspectives in place, this Nifty's life high is in a sense somewhere here at around 9,000 on a closing basis. So we are about what 1,200 points below that now, and most recently we had a breakdown of a head and shoulder neckline, and that happened actually on Friday itself with a gap down, and now we have this massive gap, and we are now below that support line of around 8,000 on the Nifty, and well, lower supports are perhaps somewhere there at around 7,500, etc. And most importantly, if we go really all the way back, that previous life high of a double triple resistance, well, that's something to really watch out for, and that is at 6,300, right? So on a weekly basis, we're going to get a very strong bearish candle. On a weekly basis, actually, if you look at the market, there's really no support for the Nifty till about maybe 6.5 or somewhere in that zone, which is at around 6,700, plus or minus maybe 100 points. So daily stuff, of course, you might get more, but at this point, if looks like 7.5 is definitely or most likely on the cards, and if it does break that, then who knows, maybe even this at around 7.2, and then I would say even 6.7 or 6.8, and then 6.3. So long way down still. Another, well, if it falls another 400-500 points, say in every week in the next 1 or 2 weeks, we'll be down another 1,200 points, and 6,500, 6,300 may look far, but it could come uh, much faster than one anticipates. Just take today for example. The market's definitely fallen down much more and much faster than anyone had thought about. So this is where we are. Anyone has any comments, feel free to chip in. If you look at the rest of the world, unfortunately this is not updated, but so Nikkei, this is 21st, clearly going down, and this is daily chart of Nikkei. You can already see the gaps, and I'm sure it went down even more. If you look at the Dow Jones, okay, where did that go? Oops. Well, there you have the Dow Jones, and that is definitely not happy news. That's of course 25th, and after breaking that level, the Dow Jones today, what's the low today? So the low today, yeah, there it is. Really nice charts, 15,400, and right now 2.7% down. It was 15,400. It is now 15,960. So it has jumped 500 points. That's about 3%. That's great, but well, it's very early days yet. So let's look at 15,490 on the Dow Jones, and you will see that 15,490 is Sorry, let me put a line. Okay. Where is it? Sorry, 15. Somewhere there, right? So that's why the Dow Jones has plunged. But the point really is that, of course, in retrospect, everything looks fine. How you had just multiple tops at 18,200, something we discussed in the previous IMR, so I'm not going to spend too much time on that. And how the fall just happened. So we have a nice rounding top, multiple bottom, multiple tops, breakdown of some very very clear supports and levels or even necklines, something like this, and measuring implications being met one after the other. Volumes building up, but the volume picture is not always reliable here, and it's just going down and down. So this is where we have come, and well, so far we have bounced from here. But if you look at it at a lower level, then maybe 14,000 on the Dow Jones is the really strong support. So from wherever we are now, we're talking about another 10-15 fall, 10 to 15% fall on the Dow Jones, and 10 to 15% fall on the Indian market. Why not? That will take us to another 1,000 points lower, and like we said, that will be at around 7,000, uh, and not very far from 6,700 level that they where some support could be there, right? So we'll just have to wait and watch. So really across the world and in India, I think there's um, no hope. One should be looking at shorting only on any and every bounce, unless something till and unless something really radical changes. Um, it's all out, it's closed longs, short the market, and any buying should probably happen at another 10% lower on the index, right? Though of course some specific stocks could present opportunities much earlier. Want to look at the stuff that Vidya sent. So hope you can all see the chart clearly. Just let's quickly get the underlying thing out of the picture here, so that I can increase the screen size. So what you can see is the market went from 8,400, 8,500 on 19th August, and this is updated till today. And this has come from 85 to 7,800 today, right? A dramatic drop. So that's what the underlying has done. Let me actually do the other thing first. That might make sense. Yeah, the option pane, right? And in that, you can see that this is the uh, max pain, and this is where the underlying is. So we've got expiry coming on the next 3 days, and there's a big difference of almost 300 points between where the underlying is and where the max pain is. If you're watching TV today morning, uh, they were mentioning that there were no quotations at all on the options side, both the puts and the calls, for um, I think the first 10-15 minutes, because nobody really knew what to expect. So interesting observation, something I didn't see myself, I should have. That the option guys, the option market had not actually started promptly at 9:15, and well, both the buyers and the sellers were, I guess, just waiting to see what will happen before they jump in. So this is the option pane, and if you look at the chart, so very very grateful to Vidya for this, especially for having done it despite his hand being operated. So very very timely. Thank you so much, Vidya. Really appreciate it. So this is. 27 second. Okay, so just in case, what you need to look at is this is the Nifty 27th, 8th is the expiry, and this is what you need to focus on. So this is for 18th August, where the option pain is. So you just look at the center line, that's 8,000, that you'll have that number itself, 8,500, and that is when the Nifty was at around 8,500. And then just watch the center line and how the red and the blue bands change. You can see how the Nifty OI is going up, but the option pain did not change. Now you can see how the Nifty OI has dramatically come down and the call OI has gone up, and this happened on 20th August. This was last Thursday. You can see that the OI on the call side has dramatically increased. The put side, I'm going back, has decreased, right? And the OI option pain has come down. And then this is today. Just look at the dramatic difference between Friday's max pain chart and this is today's max pain chart. A big reduction in the OI on puts, and a big, I'm going back to yesterday again, and a big increase in the calls. So calls being written aggressively and the put unwinding happening very strongly, right? So given that uh, the put unwinding is happening, clearly the support is disappearing quite literally from under the market, and we can expect perhaps lower levels. So what will be interesting for the next 3 days actually is that since the option pain, this is really useful, we didn't have this earlier, thanks for adding this, Vidya, is the underlying and the option pain would more or less converge and stay at the similar level. But now you've got the 300-point difference between the underlying value and the option pain chart for the Nifty, and that is quite significant. I'm surprised that actually it was here at 8,350 and it is only at 8,200. I was expecting that this would actually come down today, but this is a very interesting point, which raises the issue of how the market might behave for the next 3 days. I really doubt the way the global scenario is playing out, that the option players in India will have the ability this time to sort of manage the market, manage in quotes, to see that it closes around the option pain point. So very likely that the option writers are going to lose quite a lot of money this time, unless they make some, not unless, I think if they make some dramatic changes tomorrow, that's fine to their positions. But at this time, with the Nifty not looking like it's going to go up, the global factors are going to really bear very heavy. I don't see much uh, um, I mean, I wouldn't give too much weightage to this analysis right now, but it will be definitely be interesting to watch from an academic perspective. Uh, Having said that, this is one more point about option writing. For those of us who've done the derivatives course, we keep talking about option pain and how we can use it for trading, investing, and maybe writing options towards the end of expiry. Right. And in many months, many expiries, this will actually make money, as you've already seen over the past several months that approach in the last 1 to 2 weeks. But this is that 1 month out of or one crazy expiry out of 10 or 20, where if you don't manage this one very carefully, all the profits you made writing options in the last, let's say, 5 months or 10 months could just disappear with this one day like this, where the market just goes so humongously against you that if you wrote puts, for example, in this case, you would really find yourself in a big mess. So that option writing strategy, something that we keep talking about. We've seen the good side of it for, I think, forever, ever since Vidya made these charts. But today should show you the other side and the downside of that option writing strategy, where things can really go haywire. And if you'd written put options, you would really not know what to do, perhaps even in life. If you had, of course, written call options, then you would be laughing all your way to the bank today. So, with a certain modification, and this is something that we had mentioned, if you remember, in the FNO course during strategies, which is that if you write options and especially are using that as a sort of regular strategy, writing put options is a high risk thing, because if anything happens, then the market falls like it has fallen today, much faster than than it can rise, and a put option writer could be in deep trouble, right? So if you're writing options, calls would be safer to write. And I'm glad that we have this piece of evidence today to think about that. Okay, so that's the option part. Uh, so just to reiterate, this was beginning of the week, last week, 18th, 19th, only the put OI goes up. 20th, there's a big shift. The put OI goes down, the call OI goes up, and the option pain goes down. Then 21st, some more move towards that direction, and then 21st to 24th, big change, right? This is really interesting. Just telling Vidya that maybe this should be separately archived and stored for well, I guess educational purpose and future references in the future, right? So this one particular sheet. So just to run through all of this again: 18th, 19th, 20th, 21st, and 24th. Right. Right. Next, let's look at the histogram charts sent by Vidya. Sent by Sid. Thank you so much, Sid, for sending this. It actually hadn't even crossed my mind today evening for the IMR. Did cross my mind in the morning, but I said, okay, well, let's wait. But just Sid, as you saw, sent out that message, and we're looking at that now. So even though Sid is not here, if we look at, well, where is that list? Okay. So let's just look at the main index first. Okay. Mm, where is Nifty? Okay, there we go. Right. So this is something that we've spoken about the Nifty before also, that Nifty was expensive. And well, including hey, hold on one sec, let me stop this. All right, so that was the OI stuff. Forgot to mention this. So let's have a look at this. This is how the OI has changed over let us take it down. Yeah. Okay, great. Right. So this is how OI has now changed over the last 1 week on the puts and the call side. Okay. And what you can see is the put OI on the left and the call OI on the right. So you can see that on the put side, how, at least if you focus here, there's been a dramatic decrease today, 24th, on the 8,300, 8,200, 8,100, 8,000, and the 7,900 over interest. Right, this is extremely significant because it was building up on 21st. Okay, even though the market had fallen on 21st, the OI on the on the put side on 7, 9, and 8 did build up. So people did not believe that 8 or 7, 9. At this one, the writers did not believe it was going to break, but as Vidya so correctly pointed out, we know who's buying and we know who's selling. Wink, wink. And the FIs did buy, even even at maybe higher prices. And by the way, I was talking about writing puts being a hazardous thing or a high risk thing. That's one of the reasons why the implied volatilities on the puts are always higher than the implied volatilities on the calls, right? So you've got this 798, 81, 82 OI put OI dramatically decrease, and you can see that here on the top. And it's like, here almost 50% gone, here about 30-40% gone. And what has increased interestingly is the 7,800, 7,700, all the lower ones have increased. This is really interesting. Not very significant compared to the size of the OIs before, but this is extremely significant in terms of 75, 76, 77 increasing. Now again, if we just extend that logic of we know who's buying, we know who's selling, wink wink, then are the FIs expecting further down moves for this expiry, because this is for the 27th expiry put. So for the next 3 days, they are just buying it by the heaps, looks like. And well, looks like the market could be, who knows, it closed at 7.9 here. Basically, it could be anywhere below, between 7.5, 7.8. Of course, we don't have data for more, but it doesn't really matter. The relative size of these supports is much weaker than these. So once these higher supports are broken, then the breakage of these supports, more or less psychological numbers, shouldn't really be a big issue. Okay. Um so that's on the put side. So overall, put unwinding, very strong put unwinding, seen at the money contracts, and some put build up is being seen on the out of the money puts, and that is interesting, because if you take the FI point of view, then looks like further down moves are going to happen. On the call side, again, only specific to the near month expiry, you can see that there's been a dramatic buildup of call OI on the 7.8, 7.9, 8,000, 8,100, on even the 8,200 strike prices. Even the 7.8 has increased quite a lot. If you look at it from its relative proportions 3-4 days back to where it is right now, that's a huge increase in the 7,800 call OI. And of course for the 7.9, 8,000 also. So um again, if you're looking at it from the FI perspective, well, it does it say that the FIs are also buying calls? We could. Um, Not sure whether we have that data here. Vidya, I don't think that data here is there, right? That thing about the 4 categories of buyers, sellers, and all. Right? That was a separate sheet, I think. Right? Anyhow, that's fine. So yeah, good. Thanks for that confirmation, Vidya. So this is just people writing, and maybe FIs hedging. Who knows? But clearly the resistance, of course, the somebody is going to fault my logic now and say that on the put side you're saying that the FIs are buying, but on the other side, when it comes to the calls, you're going to take the side of the writers and all. Well, you have both sides of the view, and you've got to decide, which side you want to. Uh, uh, um, uh, whose side you want to take on both sides, the guys who are long or the guys who are short. So they're so two sets of things here. There are people who are long and short on the puts, and there's another thing of people who are long and short on the calls, right? So these are the two things which are there. Um, so all said and done, definitely support breaking down on the put side and support seemingly to build up, but if the put buyers have the upper hand, and I'm going with the opposite parties only simply because of the trend. I mean, on this side, the trend the trend is clearly very bearish now. Fantastic volumes. So looking at from who is the smarter guy, right? So if you look at from the who's the smarter guy perspective, then when the trend is down, the put buyers are smart and the put writers are not so smart. And when the trend is down, the call writers are the smart ones and the call buyers are not the so smart ones. Well, uh, that's it. So this is what is there on the OI side. So whether you look at it from the open interest perspective or you look at it from the um, option pain perspective, things are all pointing to further down moves, very likely, right? Let's just quickly check. Where was that? Right. So where did it go? Yes. Is this so the Dow Jones is now 4% down almost. It was, as you saw, 3% down, then 2% down something. Now it has again come down. So this will go on, and it closes at 2 a.m. India time. I'm definitely going to be sleeping by then, and tomorrow morning you will know what the overall thing is. So this is the intraday chart on the Dow Jones. Okay, and you can see that it has, as of now, slipped again. So 16,000 on the Dow Jones looks like has become a psychological resistance for now, and very unlikely that is going to be broken out very quickly. Let's see, 3 months. When was it last there? Mm, okay. So you can see here on the long-term 5-year chart that some support only at 14,800 on the Dow Jones, and we are at around 16,000 right now. There's also some support there, maybe uh, at 15,600. Seem to have broken that today and gone down, but the really stronger support is at 15,000, and 800 points down from here means another what, 5% down, which is what it did, I think, intraday. And we'll just have to see Dow Jones at 16,095 now. All right, thank you for that update. So that's a decent recovery, right? Let's put it back. So this is delayed data. Can't be helped. Balki, where are you getting the data from? Google Finance? Yeah, okay, fine. Tool. So 16. So how many percentage points down is it? This was showing 3.9. 2.25. All right, cool. So that's a good recovery. So I'm not sure why. Let me refresh. It is still showing 3.9 down. All right. So if it is 2 to 2.25 down, that would really be uh, a really good pullback. By the way, so that is interesting. If we have a really good pullback on the Dow Jones now, and that sentiment then feeds into, say, Japan tomorrow and then China and all of that, or the market suddenly decides, you know what, okay, fine, if China goes down, but now US is recovering, the economy is healthy, and China, and anyhow the US economy is far bigger than the Chinese economy, and the managing of the financial system, etc., is far superior and far more mature in the US, then and the market sort of choose to, what I wouldn't say ignore, but give less weightage to what's happening in China, then you could just have a bounce back, right? and that is something that one should be prepared for. And this, by the way, is volatility, right? Very difficult to predict what the day-to-day scenario will be, and if you could be long, you could be short, it doesn't matter, but the mood could change definitely overnight, as you've already seen. And what else?
Yeah, one observation, Musa, is that SCX Nifty, which was 250 points down no, half an hour back, is now 130 points down.
Okay, so yeah, uh, that's it about US essentially. That if the sentiments just quickly bounce back, then we could suddenly see a reversal of the entire sentiment, and who knows what could happen. And the Nifty could definitely be up 100 or 200 points. But is it going to happen today, tomorrow? That's really difficult to say. This is, if you're a good day trader, this is heaven for you. If you're a positional guy, you just have to write it out. Uh, you have to write it out, and really there's no other option. Or the third option is just stay out of the market, and uh, wait for it to hold support, and when that happens, then you can get back in and be on cash till then, or hedged till then. Okay. Okay, so yep, that's what there is there anything else? Okay, yeah, I think so. One second. Let's get back to the charts and see the sector indices and all that. So the next thing on this Nifty is 7.5 at least, and then if that breaks, like I said, it could be 7.2, and then who knows, maybe even 6.8 or 6.7 in the next few weeks, right? Only issue for the next 3 days or this week is expiry, and then you've got this massive bounce today intraday. Are we putting a hammer in place in the Dow Jones? We don't know, but looks like the trouble is certainly not over. Okay, so where is that? So looking at the sector indices now, where is that? Yeah, okay. So let's look at the bank first, uh, since they're the heavyweights, and you can see that I think this is what you're going to see across the uh, world, which is you're going to see across the sectors, sorry, these huge gaps. It's been a massive across the market thing, and you're going to see many, many supports being broken down. And what we should be doing in the Wealth Lab actually is putting up IB alerts for these lower levels. I think every alert we might have put on that IB system got triggered today at lower levels, and some could be buying opportunities. And like Balki said, we need to review the stuff we have done and maybe buying at low levels. But at this point, it looks premature. But anyhow, we need to put in new uh, alerts. So Bank Nifty clearly just broke down from 17,500 support, and then looks like 16,000 to 16,500. Probably happen tomorrow itself if this carnage continues. But I think the really strong support is now maybe 15,000. And in a situation like this where you've got this very very strong panic moves, you probably, if you go back to the 2008 level, so this is a good learning thing, by the way. Wait one sec, let me make it cleaner. Yep. So let's go back, right? So 2008. So this was the peak in the 2008 level, and then, as you know, this was the bottom. Where is my line? Oops. Yep, that's the bottom, right? So this was the where the bear market finally ended. And if you go back in history, this well coincided with this level, which was a sort of multi-year support, and that was from 2005 and 2006, which is something that happened 3 to 4 years before this support happened here. And I'm just giving this as an example, and what I'm saying is you probably need some strong support which could halt this downtrend. In a sense, I wouldn't say we're definitely not yet, at least in something like 2008 situation, but when you see double gap downs like that, and uh, um, uh, there is definitely then something you have to think about in terms of very very strong supports lower, otherwise it's really not going to work, right? And where is that strong support on the, let's say, the Nifty? Oh, sorry, yeah, on the Nifty, if you look at it, honestly, that sort of strong support to me was this level, but that really broke off. And then you have a sort of double bottom at 7,500. But if that breaks, then I think the next strong support is only at around maybe, and this is not even a strong support, it's just like 1 month. Right? The really, really, really massively strong support is at 6,300, which was basically the previous triple top. And I've said this for a year now, for those of us who've been on the IMR, etc. At some point, or not even a year, 2 years, that ever since this breakout happened, we will come back to uh, what do you say, testing this some point. Personally, I would be happy that the 6,300 test happens, the earlier the better. So could we come here? Well, only time will tell. And if it does, I really hope that a lot of us, if not all of us, make a lot of money on the way down. And if not that, at least we have a lot of money to invest at this 6,300 level. From every perspective, fundamental and technical, this would be an extremely good level to get into. And well, just for the sake of, I'm not reiterating, but actually reiterating. Uh, mm, uh, what at that level, fundamentally excellent stuff, technically excellent stuff. You're not going to get that chance maybe for another next few years, and that's our chance coming. Oh, sorry, what I wanted to say is, well, the market Nifty fell 500 points today. You just need what, from where we are today to 6,300. If you calculate, it's about 1,300 points. That's about 3 more days of today, and we will be at 6,300, right? So could happen much faster than we expect. This year, at this point, looking extremely likely, right? Okay. So having said that, looking at the individual sectors from that perspective of which are the strong levels lower than on the bank nifty, I would say the strong level is only at 15,000. So we are at 16,800, 1,800 points can be shaved off. Then there's also this big massive gaps which are there, two of them, and they will get closed one day. And this is like almost like Marubozu type. And on a sector index, if you're getting Marubozus, then you can imagine the carnage that happen on individual stocks in that sector. All right. BSE Auto, same story. Okay. Just cracked 200-day moving average. That's the other thing, by the way, you're going to probably see today. Any of those sectors which had not yet broken the 200-day moving average, I guess they would have broken that today. So in a sense, from a technical official perspective, we are now in a bear market. So we are below the 200-day moving average. Okay. There are various definitions of a bear market, 20% below the life high or the previous top, or anything below the 200-day moving average. Whichever way you want to look at it, we are definitely in a very, very strong, if at the very least we are in a secondary downtrend now. If not a primary downtrend, we are in a secondary downtrend. So BSE Auto, 17,000, it looks like the next support, 17,443 where we are. And if this doesn't work out, then we are looking at somewhere in this zone of 15,500. So I would look out for that, and that's it. I think we'll review if that happens. And well, who knows, it could happen much faster than we expect. So maybe we'll just put some more levels and hold on to it. Okay. Yep, that's the that's the next level at 12,400, but the really strong one would be at 10,000, which means still a 60% fall, not to 60, but 30% fall from where we are here, 30 to 40% fall from where we are. That would be massive, right? Okay, so that is autos, uh, consumer durables. Well, these were the one place where things were looking rosy till a few days back. We talked about this bearish engulfing in the last IMR, if you remember, and what a confirmation you had on Friday, and then today. Who would have expected, but still. So that's another sector gone. Capital goods, Tata bye bye, and well, the low here 16,000, and the low here, sorry, the support here 15,900, not too far from each other. But again, here's the important thing and interesting thing. This is very close to its multi-year um, support level, and will it stop here? Unlikely. It's very, very unlikely. But how far lower could it go is the question. So I think the next support zone is in that place, and that would be 14,400. So approximately 1,500 points below this. And if it goes below that, uh-oh, where can we have some help? It is at 12,560, and that is, I would be at this point, I don't think we're going to break this, but never say never in the markets is something that I have learned, and we'll just have to wait and watch. Okay. Okay. So that is where we are on the capital goods, FMCG. Okay. So that's again, like I said, broken the 200-day moving average here, sitting, as you can see, so nicely, so precisely on that support line, that green line there, which was top in 2013, as you can see. But I would say that this has further downsides, and the real strong support, which would probably not get broken from here, is 6,400, 6,500. So we'll have to wait and watch for that. So 6,600 is where we are, right? uh, 7,000 psychological mark, not sure that's going to hold at this point. That's 10% lower from here, but well, I guess there'll be a lot of we will see statements next few days. Healthcare, if you remember, we talked about this tweezers top type thing in healthcare in the IMR last, and what superb follow through. And if you remember, in the healthcare index, we also spoke about this big bull bear fight on the uh, shooting star and the hanging man right next to each other. That's definitely not a good sign. And well, who would have known that it would have? And usually, when you have tops like this, if anything, if nothing else, it's usually that the market is going to turn down rather than go up. Right? Okay. And IT, we can always look at the CNX IT because it is traded, and that just broke that support line. Right? There's absolutely no hesitation to it. Actually, with a gap, well, this one is still above the 200-day moving average, but could easily turn down. And 10 11,000 on this. Now notice this, that in spite of the rupee having depreciated today, is below 66, I think. This time it did not help. So when things go bad, they can really just mess up everybody's life. No hiding at all. So once this 200-day moving average breaks on IT tomorrow, most probably at what level is that? 11,350, then 10,900, 11,000 on the CNX IT, which means easily another, I don't know, 5% down on IT. That's the way to actually calculate it, this time when things are happening, not so much in points, but in percentages. It gives you a more, it gives you a better perspective of what to expect, or even if you're not shorting, but where one could buy. Okay, Nifty Junior. Again, can't help reiterating what we've been discussing in this in the wealth lab also, and Balki had mentioned about a point where the Nifty basket, sorry, the mid cap basket was expensive and well above its long term levels. And well, it cracked today. It's come exactly to the 200-day moving average. Beautiful technicals there for you. Once 19,000, 18,750 break, then all the way to 17,500, right? It'll be nice, Balki, if you can maybe perhaps just use that same article and extract some data from it. And of course, we have the PE data from the NSE to see at what level would that's something we should do, on a fundamental basis, to look at what level would we be looking at valuations again appearing, and uh, be prepared to sort of look for a fundamental value buying that could happen in the next few, who knows, weeks, if not months. If not weeks, then definitely in the next few months. Okay, then, well, CNX Energy, the hell with it. It just has cracked. So crude oil, by the way, has also come down to a 6.5 year low. Now I think it broke that $44 level. That's what was there in the morning. I'm not sure if anybody has an update on where crude oil is. That would be great. Actually, let's look at Investor and let's look at crude, because okay, there's no live data here, but we could perhaps at least get some idea in terms of in the Indian context. This is why having all this data is so useful. Okay, so if we zoom in, well, that's where we are, sitting exactly at that support line. Okay, uh, actually that support line is actually art. I didn't draw that. It's visual bug because of the way. Okay, let me make it weekly. Okay, oops. So it's there, exactly there, and I would suspect it's broken. This is like daily chart. We don't have today's, and this breaks. Then crude oil falls from 2000, about 2006, 700 there to 2000 easily, and that would be very, very happy stuff for inflation. That would be very happy for us at the petrol bunk, all that stuff. And if inflation goes down further, then here's the roundabout thing, it all gets connected. Then will RBI cut rates? Will RBI now do something to say, let's use this as an opportunity to spur the economy better? But if you looked at Raghuram Rajan's speeches in the last 2 3 days, one with the SBI chairperson, and the other one today at Mumbai, you will see that he's quite clear that inflation really is not the issue, though he is very clear that inflation is down, that we have supply constraints, and that he gave a very nice talk today. If you can watch it on YouTube or wherever, and explain some very nice, simple, basic concepts in economics, and how traditional and modern economic theory don't agree with the same thing. And essentially, what he was saying is that if we cut rates now in a situation where the supply problem has not been solved in the system, then you could definitely see an increase in growth in consumption, and it would spur growth in the short term. Everybody will be happy. But because the supply constraint is still there, you suddenly get an increase in prices, and inflation will then go back up, because prices go back up. And then does the central bank increase rates sort of abruptly to contain inflation, and that's going to cause a lot of disturbance and sort of ad hocness in the economy. And that's something that RBI slash he would prefer not to do. So he said essentially that if everything else had been in place, the supply demand issues in India, and the supply chain, the production, all that was in place, then they would have probably, he didn't say that, but reading between the lines, they would have been happier to cut rates. But since that's not there, there is an issue with that. He also said about, since India is a major, I think him or some other analyst, about India is going to tremendously benefit from lower commodity prices, since we are net commodity consumers, and that's again going to be good for the economy. So this global cooling off on just about everything is good, but at some point, where does India take a hit becomes the issue, and I'm not sure anybody has a clear answer to that. And if and when that happens, we'll just have to deal with it, right? Okay, so yep, that's crude oil. I'm very tempted to look at, okay, let me stop the recording and bring up MCX and start. Okay, usually never go to uh, money control for commodities, but cool, why not? So the 21st, so this is where it is right now. It is at 2,637 rupees, 1.75% down. And if you look at this thing here, then it is bounced back from its lows here at about 712. Nice charts. Okay. Um, So this is the near month contract. Next month contract is for October, November, December, Jan, and then we have Feb. So 1, 2, 3, 4, 5, 6. All right, cool. So the issue here, of course, with crude oil is the depreciation of the rupee. If the crude oil price goes down by 4%, but rupee depreciates by 2%, essentially we can only fall 2%. But if let's say the rupee depreciates 10% and the crude oil falls 4%, then we will actually be paying more by 6%. Just broadly saying this, right? So, oh, did you see this by the way? Indian Oil. So looks like Srinivas is in real great luck. Indian Oil Corporation says all units of its 274,000 barrels per day Koyali refinery in Western Gujarat running normally, except something where a minor fire happened, right? So this, it might be minor here, but when the markets are in a bad mood, they will take anything like this and slam the stock down even more. So this is something that could just take IOC down. Of course, there was the issue of the OFS today. When now that's over, could easily go down a lot, right? So cool. Uh, so yes, so this is it as far as the crude oil is concerned. Commodities we were talking about. Let's go back to our charts, right? So energy down in the dumps. Oh, and in a sense, okay, let me make this weekly. Yeah, this is where perhaps right, it is. And well, even that's broken 7,500. Of course, this is only from 2011, and this is the life low. So the other thing that I can only put is right at the bottom there. And do we go there to 6,800? We, well, I guess very well could. So how much these old trend lines are now useless. Okay. So let's go to BSC then, since that I think is there for a longer period of time. BSC oil and gas had some bug. Yeah. Okay. BSC. Okay. Metals now. So BSC metals looks like they're definitely heading towards their 2013 lows at 6,400. And well, if that breaks, then we are possibly looking at somewhere around the 2008 lows, which will take it down another what 2000 point, another 30% lower from here. So just into free fall. It's literally like falling off a cliff, if you can, imagine. Came down, waited, and then just falling. And there's no support till 6.5 on the BSE metal space, right? And in a weak stock already beaten down, this could easily be put down even more. So here's the mid cap. We saw this on the Nifty Junior, so I'm not going to spend time again, but this one is below the 200-day moving average here, right? Okay, that one I think also was. PSU Enterprises, this is not the PSU banks, this is the PSU Enterprises, and that's also gone. And again, can you see, I mean, I'm just so even now so wowed by TA. This line was there, has been there for months, and the market comes just there and halts. I mean, something that I think Srinivas had made a point of in one of the comments he made a few weeks back. Why don't we just concentrate on TA? And when you see something like this, you have to say, yeah, why not? Why not? Why just forget all that other stuff, research, and all that? But then you talk about conviction, you talk about guts and all. Well, if you have the conviction and guts based on TA solely, then yes, I would say that don't waste time on FA. But for most of us who don't, we still have to do that. Right. So the next support on PSU stocks as what a sort of very broad thing, and it's tough. Is another 10% down from here. We are at 6,600. We could come down to 6,000. and that could happen tomorrow. You never know. So again, sector specific stuff could be different, but this is just as far as the government control goes. BSC Realty, all right, so there it is gone, and it is now close to its life low, and the life low was there. Okay, and so this is from 2007 onwards, right? CNX Realty, if you look at it, that is there from only 2010, so we'll just why bother. So if you look at BSC Realty, close to its life low. So any of us who did not buy things like India Bulls real estate and all of that would be thanking our stars. This is how things are. You just sometimes don't do something, and not doing it gives you a immense sense of thank God I didn't do it. And so reality at its life low. And what do you say? Where could it go down to? Thousand. If it goes to 1,000, it's another 10% below. So it's already what, 10% down today. Actually, more, about 12% down today, and then we're still another 10% down maybe in the next few days. Right. Okay. So that is reality. Then small caps. So small caps essentially, well, gone. They're going to become small again, right? Quite literally. Some of these stocks are going to become micro caps, and then some are going to perhaps, disappear. Uh, where can this go? If you look at this from 5,000 onwards, this was a move that happened without any significant correction, right? So I'm talking about from mid 2013 to now, there is no significant correction. This is hardly anything. This is went from 5,000 to 6,500 and came down by about 300 points, right? 5%. So now from 12,000 to 10,000, you're talking about almost a what? 2,000 point fall, about a 15%. So this is now becoming a meaningful correction. So we are in this case also, again, we're still not in a downtrend in many of these things, like I said before, but clearly a deep correction if nothing else. So on the small cap, very close to that 10,500 support level, as you can see, right? We are sort of there, and we'll probably go to 10,000 or 9,700. uh, and there's nothing to do except uh, wait and watch. You can't, a lot of the stocks, again, by the way, in, okay, so I just wanted to make a point of derivative trading now here. If you are in any of the non-derivative stocks, the only option you have now is to sell. There's nothing else you can do. You can sell your long position existing and then wait for lower levels to go long on whatever, even of the derivative stocks, of course. But this is where, learning derivatives is makes all the difference. The only way you can make money is shorting. So Gyanesh today made 25K, Srinivas made 30 plus 30. Yeah, the only way is you shorted. If these guys had not bought puts or shorted the futures, there's nothing else to do. There's no way you make money. So for those of us who are so, I would say, focused on the non-derivative side, this is one of those downsides of non-derivative stocks, that these crashes happen, and when they happen, you're just stuck literally, because there's nothing you can do, right? You have to either uh, just tighten your seatbelt and ride the rough water, or take huge losses, and that's it. Right? You can't protect yourself, you can't hedge, you can't do anything. unlike people in derivatives, which makes me wonder whenever things like this happen. Actually, I started wondering about this even in the IMR previously, but since there was no time, I didn't bring it up. This thing that we proposed or we've been trying to implement of just getting all the FNO stocks done in place first, and then moving on. Maybe we need to, discuss that. I'm even more convinced now when you see things like this. Not that I didn't know before or you didn't know, it's just that the level of conviction becomes far stronger. And then we say, let's put a hold to everything else. We do only FNO, get that really, really rock solid for the rest of our lives. And then if there is time, effort, resources, willingness, etc., we look outside for in terms of trading, investing, and all that. And if not, then be very clear what the pros and cons of other strategies are. And of course, value buying, all that what Balki said about TMIT and all, that would also be great. Okay, tech. That's it. I think, like I said in the mail and here, there's really nowhere to hide, not a single green anywhere. And I've covered everything. See, PSU Bank finally. So all this euphoria because of the recapitalization gone. But here's the thing, that is still going to happen. And we actually have a tweezers bottom here. Just watch this tomorrow, just purely for academic reasons, nothing else. The low here is 3150 and the low today is 3137. Uh, Most probably it'll not matter, it'll go down further. But that recapitalization, whatever happens to the stock markets worldwide, is going to happen. It is going to be good fundamentally, and you could be looking at some very, very attractive valuations in the next few days, weeks, whatever. Crazy thought, but I'll say it anyhow. Maybe just bring over your, pajamas and mattresses over to BIC and we slog it out for the next 10 days, morning, day, night, get dinner, get lunch, breakfast, do some really great research and have your money ready because when the time comes, you just want to go in and buy. And I'm saying this again and again. I mean, you might just be started on this, but you're getting a once in a 5 or maybe 10-year opportunity. That the last one was in 2008. You're getting one after what, 7 years. We missed this one, then I don't know. It's going to be a very long wait after that. So think about it. If you want to just put everything else on hold and just do markets till you exhaust your money, or we get exhausted, and then we'll see. Okay, so that's it. Nowhere to hide. And if anybody has any requests or any specific stocks, then we will discuss that. And in the meantime, I'm going to try and get the uh, histograms. 1 second.
So I mean, I personally I feel that 7.5 is the level because I feel I mean I think the coinciding of a stock trending up and the Nifty reaching a critical support level will be the way to go.
Mhm.
When you're talking about research, what and camping out in BSc, I mean, what were you looking? Are you looking specifically at small caps or? I mean,
No, I'm not having any specific things in mind. I'm basically, it could be the stocks you have found. It's a whole range of things. It's the stocks that we have discussed, like Crompton Greaves, etc. In BIC, uh, and we just review the whole thing, and we could be just sitting on some amazing opportunities which we may not get again. So the idea is to review that and do that because the bottom is going to come, and then we are searching for that bottom. And what should we do now? It'll be too late. It'll just suddenly jump up 10%, and you've missed the boat. So it's not something very, very specific as in this is the only thing, but it is about uh, you know, taking the best opportunity that we have right now. So it could be your stocks, it could be all the indexes. I would start with that. I would start with uh, discussing the indices first, and then taking the rest. Then, from
Okay.
the index discussion, look at what might be um, uh, the best sectors to get in. So we have talked about realty, we have talked about metals, we've talked about infrastructure and power. Those are the four things that are really beaten down, and they'll be beaten down even more now, right? And maybe we should be looking at potentially buying stocks there, because once the recovery happens, if you're looking at value buying, now of course there's the other thing of saying which are the good ones, and then they have been beaten down, and those will probably be the ones that bounce even better. So there's a lot of, I mean, approaches to that, and it's just a question of what we agree to work on.
Okay.
Yeah. All right, so can you guys see my screen again? So please confirm. You should be able to see the Nifty PE, the histogram of that. Right. So if you remember, it was almost close to 25 last time we saw it, I think 3-4 weeks back, and now we are at 21.6, which is still expensive. And if the market were to, say go down by that, say 1,500 points to about uh, say 7,000. Actually, sorry, what am I saying? So that's 6.3. Then we are talking about how much? I don't have a calculator here. Just get the Nifty thing. Let me get this better. Oh, by the way, this is where IB is excellent. You can just put a line and it'll tell you how much percentage the shift is from your reference point. We don't have that in Metastock, at least in the version I'm using. So, even if you say from 7.9, Bobby is saying 7.5, then that's not actually very far. That's almost about 5-6% move. But if you're looking at, say, 6.8 or something like that, then you're talking about a 12, 14, 15% move. And I'm just trying to get a sense of, say, 15% lower would mean that the P ratio would be about 3 points lower. That would make it about 18, and around 16, 17 is a long term a mean of the Nifty. So it'll come there with a sort of 15% correction, and there will definitely be some set of people buying it. But at this point, uh, oops, this is yeah, right. uh, Sorry, I was looking at the Nifty Junior. This is the Nifty. Yeah. So it will come to around this level, and that will, as you can see, a lot of clustering there, a lot of support there in terms of time, and there could be some really, really excellent buying opportunities at that time for people who are looking at from a 1 year, 2 year perspective on the markets. And well, so that's on the Nifty. Let's look at the other indices, and we'll just maybe just go there section wise, it'll be easier. So if you remember, we've kept saying for a long time that autos are very expensive, and they continue to be very, very expensive. And this is where, if you are looking at buying anything, or auto or auto ancillary stock, you need to take a very, very critical view now whether you want to hold on to it, because even now, so with a 20-30% correction, then also it would not be cheap, right? So when the mood really turns bad, There could be these expensive stocks that could get beaten down, but of course, some of the stocks also have some great value, some great growth, some great businesses behind it, and you never know where suddenly some bulk buying comes in or some institutional buying comes in because they think it's fantastic valuations, uh, taking the future into account. But still, those of us who are holding auto ancillaries, you need to think about that. Then we have, let me just take this to a separate screen. And so just going back to Bobby's question, so everything that I'm doing now is just the PE stuff. That's what we normally do, as you know. But we don't look enough at the PB and the dividend yield stuff. And if we do that, and tie up all those things together, we'll probably get a lot more conviction and better levels. As you can see, bank PE actually quite reasonable. So buying banks 10% lower could be a fantastic opportunity. This is a pleasant surprise for me. Really wish I had cash or money to buy en masse. Again, not opportunities you're going to get over and over again. If the CNX Bank P comes around 15, then it's at 17, and 15 is about 17 and a half. It's about 2.5. It's about, again, 15-20% lower. So if the market corrects about 10-15%, the bank Nifty, then that would definitely be good value buy. Not cheap, but reasonable, good enough. Look at CNX Energy. Right. Problem with CNX Energy, actually, this chart is that this is only from 2011. The bank chart is actually from 2008, right? But the energy chart is from 2011, so it does not include the 2008 peak there. So not a full picture here, but that's all we have, so can't do anything with it. And from this, it already looks cheap, right? It already looks attractive. But because we don't have the 2008, we can't really go with this as reliably as we can with the Nifty or the Nifty Junior or Bank Nifty. If you look at CNX Finance, this is much better because this is from 2008. And if you look at this, again, you're not very far from good valuations at all. On this, even a 5-10% fall, not a 15-20% fall in CNX Finance would be excellent. You need to go and look at which are the stocks in the CNX Finance thing and see if we can, find good opportunities there. Okay. Then we have CNX FMCG, right? Just a sec. If you look at CNX FMCG, not actually expensive, right? And at lower levels of about 35, which would be a 10% down move, FMCG is going to become a reasonable valuation. Then we have infrastructure. This is from 2008, and this is really nice. It is already cheap, right? Balki, I think we should revise TMIT, as you very well said. Infrastructure stocks are already cheap, and those of us who are looking at this is like real portfolio building now. All right, real practical stuff. Opportunities are coming up, and if the market were to fall uh, by any amount, these would be hitting the bottom soon. So even a 10% fall from here will take it from 12, 18, and a 20% fall, mouth-watering stuff. If you actually, I was tracking GMR intraday, and I told you what happened. So from 12, it went to 11, held on for a long time at 11, and suddenly in the last 1 hour fell to 10. But from 10, very swiftly, very, very swiftly came back to 11. And 10 to 11, I mean 12 to 10 is a 20% fall, almost a little less. and then from 10 to 11 is a 10% move, and the volumes on that were pretty impressive when I was talking about and I was looking at futures. So I think, we are not the only ones who would have understood this. There'd be people who are, of course, far smarter, far better placed than us, and who would be taking these opportunities. Are we going to do that? Well, we'll see. CNXIT. So this is from 2008. Good. It doesn't have from 2001. So reasonable already, and any fall could be a buying opportunity from a fundamental perspective. Then CNX Media. All right, this is definitely on the expensive side. Okay, and needs to cool down by what I would say more than 10%, maybe 20% fall on the media, and then we would be looking at some good valuations. Then we have CNX Metal. Wow, this is already cheap. So CNX Infra Metal. We should just look at power next. I'll do that, right? This is already cheap, and if it falls from 11 to 10, and then it, let's say, goes back to 15x valuations after 1 year or 2 years, you're going to get a 50% gain on that, right? But then it can also go down to 5, a big amount of big tall histogram there. Okay, really happy at what I'm looking at. Balki has reason to be even happier. Let's look at, I'm just going in the alphabetical list that I have. CNX Pharma. Whoa, my God. So autos, pharma, this is not just expensive, this is ridiculous. 70% growth to get uh, um, this sort of PEG will be one. This is, I mean, there's something I'm missing in this, I think. I don't understand at all why pharma is this expensive, uh, and has every reason to actually cool down. All right. Okay, then PSU banks, since we have their data, I'm looking at it, and this is from 2008, and you can, this is really interesting, isn't it? PSU banks are amongst the more expensive ones in the whole bunch we have seen, not from a absolute basis, but from a percentile basis. And even if they corrected by 40%, they would still be expensive historically. But this is where you have to keep the future in mind. With the recapitalization, with public sector banks getting private heads, I mean, people with private sector enterprises as the CEOs and MDs, and the government actually pulling back from um, interference. If that is going to continue, and there's no reason why it will not, then good that this past may not be as relevant to the future as we think it is, like in the other indices that we have done, and we may be seeing that the entire sector could be permanently re-rated upwards from say the 6 to 12 level to maybe the 10 to 16 level or something like that. It will still be 50% lower than private sector banks. So this is something that we have got to keep in mind. Next, CNX Realty. Well, there you have it. Not ultra cheap, but definitely already cheap, and anything another 10-20% down will, from 25 it will come down to 20, and then to 15, and it will definitely be a very, very good buy. And that's it. If you look at the mid cap index, well, that is actually not that expensive, right? Mid cap 50 PE is already quite cheap on the historical basis. These are all historical ones, and any correction is going to make it even more attractive. So this is very, very interesting that on the technical side we've got sentiment extremely battered, but on the fundamental side, even a 10-15% fall, and unlike, so on most of the uh, sectors, a 10-15 20% fall is either making them reasonable or very cheap. All right. And there are things like auto and pharma where even a 40% fall is going to just make it close to reasonable. So it depends on how you want to, take this up and look at um, your own personal strategy. You want to look at value stuff and buy the ones at their fundamental sort of bottoms almost, perhaps not there but close to that, or do you want to look at growth opportunities and say, pharma, auto, IT, stuff like that is where I would rather put my money in. So each one's philosophy is important here. Vidya has very appropriately and timely pointed out that GMR Infra, I was talking about, that is at an all-time low close today. Yes, it is, but also the valuations are at reasonable stuff. Not specifically with GMR, I'm talking just about the infrastructure space. Let me put that up again. Where is it? CNX Infra, right? So GMR specifically may be expensive, may be already ultra cheap. I don't know. Unfortunately, as we all know, we don't have charts for that. But as a group, as a sector, it is becoming good value. And all right, so Reliance Infra all-time life close low. Great. So could go lower. You have, of course, this theory of go 52-week lows are the ones you want to perhaps avoid, and there's the ones to short, the other ones which are showing weakness. But over the last 52 weeks is at the lowest point. So could this also be a bottom? We don't know. Both ways could be right. Or somebody says, I want to buy 52-week highs, and uh, uh, I want to buy strength essentially. But also the counterpoint to that is that's at a 52-week high. It could also come down for a correction. Depends how you want to look at it. So let me look at our daily market report. And again, my thanks to Vidya for this. Let's not bother with only FNO stocks. We look at days. Wait. This I want to sort this. Oh, this is all-time high. Sorry. Comes up first in the list. GMR. Interesting. Okay, so these are all the stocks at 52-week close, right? Actually, not 52-week close, live lows, right? These are the ones perhaps to be shorted, and things like NMDC, things like NMDC. I mentioned it specifically because we had discussed it in Wealth Lab, and if you remember the research report, clearly we said just avoid this for the next 2-3 years, and it's probably a good shorting candidate. So technically, timing wise, fundamental, yes, NMDC. The other ones, we did not have any um, reports that we could get, or even if we did, we didn't have the time to read it. So I have no fundamental idea on it. But all the other, well, these are the ones that you want to consider shorting all the way till who knows where. Uh, okay. These are interesting. All right, JP Power and DLF, right? Just 1% away from their life lows. And generally, when a new life low gets created, then you get even more shorting and then even more pushing down on the market. Uh, KSK, this would be interesting. Unfortunately, you can't short these things, right? Because it's a spot thing. But this is coming back to its life low, it's 2% away from it. And this is the life low was on 20th December 2011. And if that breaks and the stock is 35, then who knows, it could go down much further. But All right, so actually, since we're talking about shorting here, I guess we just have to focus on FNO stocks, and let's do that. NMDC ended positive today. That's interesting. That's really, really interesting. Thanks for that input, Srinivas. Shorting. Right, this is interesting. RCOM coming back to its live low. It's 2.5% away from there. 2012 50. By the way, 50 technical. Sorry, psychological level. Let's put a RCOM on the charts. Hmm. So if you look at RCOM, it's back to its close to its life low, all right, and interesting actually. Big move down, but the volumes are really not that significant. That is definitely interesting. I'm wondering, we haven't looked at volumes at all in today's discussion, but if this is a volume picture, then well, you could actually get a good bounce. So if it goes to 50, could be a good psychological level as far as RCOM is concerned. Let's look at NMDC. Okay. Green candle, good volumes, yes. The only problem with this green candle is that it is, basically green just because it went just what was the close of this? That the close was 93.05 and the close of this was 93.35, 30 paisa up. Would have much preferred Marubozu type and all. And of course, yes, made a life low 92, and some buying there, maybe a valuation issue here which we are not aware of, but definitely premature to be buying this. Okay, all right. While we are at it, and since we spoke about it, we could look at GMR and massive volume, right? So is this selling? This is buying. Is this selling? Is this buying? This is of course both. Then you have to take a view on whose side you are on, and well, if you're a buyer, you look at the shadow and say, "Ah, good." If you're a seller, you'll say, look at the body and say, "Hey, it's going to go down." So let's put that 10 rupee thing here, and we will keep a watch on that. So actually, 10 rupees not on the spot. 10 rupees came on the futures, and this low is 10 rupees 80, so low is 10.10, right? Okay, so is actually that's all we can do. Keep a watch on this. Okay, just for the sake of completion, wait, okay, let's one sec. My mind is going all over the place. This we'll just finish this and see if there's anything. GMR. Anyone has any specific stocks here? Let on the shorting side. Have a look at it. Would have been there is open interest data that we have here, but unfortunately, not 100% sure it's accurate. So we'll check that later. This is the other one. You can see the, uh, 52-week high low, 3-month high low, 20-day high low, and you can see how the lows have just the number of lows has just rocketed. And have a look at this. This didn't happen today. It's been happening over the last 3-4 days, right? um, Especially for I mean for everyone, but Vidya, just wanted to point out how useful this stuff is. He's the one who built this whole tool and upgraded it. We knew that this was happening, so this was the 3 days advance notice. You look at the OI data, you look at this market-wide data, you look at the options data. I think the writing was on the wall. If anybody had this, then one should have, been aggressively short and getting out of longs. Okay, so this is excellent. Then we have traders index, and that is something that I guess we'll just, and I'm not going to get into the details, but this is typically what happens when a big fall happens. But it happened only today. It was just going sort of range bound for the last month or something. Couldn't really have made much from this. Um, Looking at stocks at all-time highs. Are there any stocks at all-time highs actually today? Uh, right. So there's no stock at all-time highs. If there is anything, it's all 3 days away. So it's not a single stock that created an all-time high. All Amar Raja, Divi's, Glenmark, VTL, 3M India, all 3 to 4 or 5 days away from that all-time high. Okay. 80H away, the all-time lows. Okay. Really nothing more on this. Just trying to see if there's anything. If you guys observed anything, please do let me know. And what I will do now is Bobby had request for well spun. Well spun. What's this, the code? Yeah. Well spun Gujarat is what? I have no idea. Well spun enterprises. Ah, okay. I hope this is the one. Well
Is
spun 9.
WELN? No,
Huh?
is there? Is there? I
Is
saw
it
it in this
this?
thing.
Well spun
No, no, no.
industries?
Just open it up again. WELN. E. Just below WELENT.
This one.
Yeah. We're on $50 something.
500 bucks.
No, there's one. Wait.
Give me the code.
1 second.
Okay. While you look that up, let me just quickly go through the Nifty stocks ultra fast. Just want to see because I'm curious about the volume part.
532553.
Ayo.
Wellspun Projects is another name.
That okay. That 5-3 stuff is all BSE code. Maybe we should have a class on remembering ISIN numbers. No one knows them.
11626 is the NSE.
One sec. What are that well spun projects?
Yeah, 11626 is try. Yeah, that's try that. Maybe $50 I think it is.
It is 39 rupees and the damn thing went up today. Right? How come this is not updated?
59 or 50?
There's
It's not updated.
something I did.
No, it's 54 on my this thing. 11626 is the.
Okay, 1 second. Something ACC. No idea. Well spun projects. Well, what is that number you said?
Try Wellspun Enterprises. 11626 NSE.
Well, ENT.
Yeah, try that. It's all too many Welspun.
You're giving me wrong codes.
Yeah, 54. This one will be around 54.
Well, that clearly gapped down. Doesn't look like it's good support at 50. We'll see. Today, not much of a down move actually.
Yeah, that's what it is. I bought this. Some stocks show strength after maybe even some of them just flop totally.
Yep. So you
But I
got
think
to.
after this, because today was a sudden thing, no? Probably this week we'll have to wait and see what happens. So that's why I'm expecting more selling because of today, tomorrow.
All right. Okay. And yeah, fine. So that is well spun. Nothing more to say on that. Okay. So something happened here because it went off on extremely handsome volumes. But what is this? You, as usual, your stocks 195 volume, 1000 shares volume, and all of that. This is just into 1000. Sorry, 165,000. Okay. My apologies. This is good
Yeah, that's
volume.
a global giant actually.
And then it's coming down
It's
on
a global
really
giant
in what?
hmm?
In what? What does it specialize in?
uh, they, they make these pipelines, specific pipelines for oil and gas and even water.
Hmm.
And there was this, the government was planning to store up crude, no?
Yeah.
So this container terminals is the infrastructure for oil and gas.
Mm.
Maybe not right now, and oil exploration specifically. Once that takes off,
Mm.
this is something to keep in mind.
Mm. Okay, cool. Um, Folks, since Bobby mentioned this, there are four companies which are doing an IPO. I'm forgetting the name. Wait, let's go there actually while we are at it. Okay. NSC India products, initial public offerings, right, current reports, book building. Why I remember this is, let's see, which is this company? Yeah, I think, no, Navkar Corporation, all right? These guys are into this container terminals and they've got some really, you should read their red herring prospectus. I was just going through this for the EQNS class yesterday, and very impressive information about the container terminal cold chain uh, handling capabilities across the world in India, and specifically about about this company and who are the competitors. So if anyone wants to go and look and read up that, as you know, red herring prospectuses are extremely useful and rich in information about that specific sector, business, etc. So would strongly encourage you to have a look at all of these. There's one more here, this Pennar Engineered Build Systems. Uh, yeah, a very interesting one. A very different red herring prospectus because it has something about Mauritius and global investing, trading. These guys have done private placements with a Mauritius-based company, and there is a whole section about 40-50 pages on information for international investors. This is something I've never seen in any other red herring prospectus. So for those of us who are really keen and interested, I would strongly encourage us to read this. Right? Okay. So going back to, yeah. Okay. So ACC, this is interesting, isn't it? Hasn't really fallen, right? And seems to be holding support. Volumes really haven't picked up. So there are going to be these stocks with like this, which are at really good support, wondering why. And then if they break down, they just break down rapidly. And if they don't, then this could be really good, stocks to buy. So I would look at this level and just keep a watch on that and see how that goes. So this is at about 1350. Okay. So this is interesting, right? So ACC doesn't break down, but Ambuja does, right? And on a higher volume, looks like it's going to go lower to 205 and very likely. So let's look at Ultratech also. And Ultratech has just uh, broken down, and it was showing weakness even before, of course, today with all these two candles, which is not there in ACC and um, Ambuja. I would think that ACC is just a matter of time that it's going to break down. You may want to look at that tomorrow morning. It hasn't yet broken down, and if all the other two major cement ones have, then there's no reason why this should not. Okay, Asian Paints, well, that broke down that descending triangle today. Measuring implication probably not met and probably going to maybe 800 bucks, right? So one thing just to mention is that any bounces now should probably be used to short, right, and not to go long. So I think 800, 810, and the moving average, 200-day moving average is around 2775, could easily be heading there. But volumes again not really that big, right? So this is sentiment stuff, and very very swift and quick recovery could happen. Now this is really bad, right? Axis Bank, big volume. Usually you'll not go wrong on stuff like this, and this would easily go down to 463. Very interesting looking at what happened at Kotak Bank, and then we'll come back because it has a very similar uh, thing. Yeah, there. Right, so Kotak Bank just has broken down, but after going down to the support level of 635 as expected, it has bounced from there, and it is just below the 200-day moving average. Volumes again are high. Okay, then Bharti Airtel, well, what a nice recovery actually. Good volumes, but doji at best at 355 import, but long term 10 line broken and lower levels most likely. BHEL, so now goes back below the, so it, look at this 200-day moving average, sort of 1, 2, 3 supports, gap yesterday, and then today goes down and goes down very nicely to that support level of 227. PPCL, there it goes. It had also got, well, but look at the volume, really not there. And with crude oil prices falling, we'll have to see how this pans out. But again, this is a sentiment, global sentiment thing. And this trend line would also be uh, broken now. Just again at 200-day moving average, very not very far from that 790, probably coming to 780. Coal India going down, going down. This is at a very important juncture now for Coal India. This level of 335, if it breaks, then, well, doesn't seem to be much of a support which is available for it. Maybe at around 315. But this has been a vertical fall without a break, without a bounce, minus this from 440 to 325. Very, very interesting. Could the bounce happen? But any bounce should be used for shorting. And what's the volume? Not in favor of going down. Very interesting. ITC. This was one of the stocks we said you should probably not short, and good if you didn't. You can see 315 to 330, big move there. And if you remember FMCG FA, at least on the PE side, it was quite reasonable. So this is something that could actually, become a favorite defensive stock for fund managers, and they could go up. I would definitely not be shorting this. There was a news item about the Yippee noodles having led from the UP food laboratory. We'll have to see, but I think in the bigger scheme of things, this is going to pass, and that's is very small noise compared to what's happening in the rest of the world. And besides, unlike Maggie or Nestle, you should remember that it's the EP noodle doesn't really contribute much to the overall uh, uh, what top line or bottom line of ITC. Right? Okay. LNT, well, clearly that cracked. Volume is definitely not good. Could expect LNT if it breaks below 1500 to go to 1550. That would probably be the next level for LNT. Right. But I really wish I knew what the valuations were, because I suspect that the valuations are quite attractive because it's come back to its 2008 level. And I want to stress that I'm assuming that the company's fundamentals have improved in the last 7 years, but that need not be true. Lupin, well, down but still showing strength. The thing about pharma stocks, as you already saw extremely expensive. So technically, excellent support here. But if 1750 breaks, then 1700 Lupin very easy. M&M clearly broke down quite well, but has increased, no doubt, but not in the sort of climactic proportions as one would think. 1200, 1150, definitely good support. Would not short below beyond that at this point. So Maruti finally takes a breather and comes and just sits on the 50-day exponential moving average. Uh, but on very large volume, so so further down moves quite likely, but these moving average 4000 and the psychological levels are the ones to watch out for. Okay, again, a stock which really does not have a meaningful correction both in terms of price and time, from a price of what 1700 to all the way to 4000, 300% move up without any great consolidation, or correction. There was some consolidation here, 1, 2, 3, 4 months, but that's it, really not a correction. If it comes down to around 4, 3, 5, could perhaps be a good buying opportunity. Nifty Bs, we'll leave that. NMDC, we covered that. NTPC, well, there it goes. I wonder what happens to the government's hopes of disinvestment now. Do they put it on hold, or do they go ahead? I'm not talking about OFS and all that anymore. I'm sorry, IOC anymore. I'm talking about this whole list of stocks: Engineers India, NTPC, Power Grid, GAIL, I think, which the government wants to divest, and with 10, 15, 20% lower prices. What is the government going to do? Put it on hold, find money elsewhere, let the finances uh, sort of the national level finances sort of deteriorate, or what? We'll have to see. ONGC, well, should have been obvious that it'll go down. ONGC gain, OIL, not only downtrend but also, and you can see the Marubos. This one doesn't even have a shadow, small shadow at the bottom. But falling crude oil prices definitely not good for this stock, and that's it. Uh, this was really good support. ONGC probably headed to 210. It is at 227. You could get a bounce given that it has fallen so much, but any bounce even till 240, 245 should be used to short. PNB gone, but volumes not so much down, not so much high, and it's come to a support, next support at around 132, and could actually be a buying opportunity. So you have to wait and watch. So that recapitalization stuff and all, just what I'm saying. I mean, it's perhaps going to be a buying opportunity. In the IMR last, I said those are a set of stocks that you don't want to actually short. I stand by that, even though it looks like it might be a good one, but I think you'll get higher probability shorts elsewhere. So you never know when somebody big wants to just come and decide to pick it up. Okay, power grid, good volumes, but very, very, very nice recovery. I don't know whether this was a flash crash, an erratic trade on the 13th, but what's interesting is around the same price zone, you seem to be getting a lot of buying. This looks like some aberration, but today definitely some buying at lower levels, 127 and back to 131. That is quite a good recovery. So are we looking at some, I don't know, whatever, strong buying at lower levels? When you see stuff like this, you want to be careful with shorting it. Reliance, whoa, did not expect to see big volumes. Actually, a little disappointed with that. Well, but there is a personal disclaimer to that, of course, that you know my views on Reliance and on the business end of things. But to see this sort of volumes, that is definitely a surprise. So um, Reliance definitely, going lower. If you're looking at it from an investment perspective, that's excellent. Didn't expect to see so much volume though, and just below 840 now. That is definitely multi-year support. If it's below 840, where does it settle down is the good question. And well, I would say, well, 800, I guess, next level to watch out for. And then after that, it would be somewhere around 775. Okay, and huge gaps. Okay, SBI. All right, increasing volume. If you notice this is interesting. This was the announcement that happened, yes, about the recapitalization went up at that time, definitely decent volume, but the selling happened on even higher volume. This bounce up didn't happen on very high volumes, and the selling again is happening on higher volumes. So that is definitely of interest. Does it go down to around 230, 235? It looks like net more selling than buying. Interest is there in SBI, and definitely uh, mm, oops, what am I doing? Just looking for lower levels in case it goes there. 210, suddenly things crack. 230, 210, possible. Sun Pharma, not nothing with any levels actually. Tata Motors, so that has really cracked. I was really being punished, and volumes again very high. 300. Oh, this has come back to its 2010 peak, and its 2010 peak is actually not very far from its 2008 peak. Or is it? Okay, let's have a look. Yeah, actually it is, but we are at 308, and 2008 peak is at 182. That's quite a bit. unlikely right as of now, but we will review. Again, this down move has not had any meaningful, up correction up. So it could go perhaps even all the way back to 400 at in the near future, and then again you might get some selling at high levels. This is interesting because if you notice the DVR thing, this is Tata Motors. You can clearly see the downtrend strong and sustained. But here you got this bounce, right? It didn't go down the same way. So even though one would expect this would track the Tata Motors thing very, very precisely, it actually isn't. And maybe at some lower levels, Tata Motors DVR could become a good buy at around 190 to 200. Volume, however, on this also is very high. Okay, Tata Power, yes, slam dunk, good volumes. Marubozu, no gap, 60 at least, next level. And then who knows, 50, 55. Tata Steel, oh, so metals basically just crashed on good volumes and most likely to go lower. So it what's the low? 202. That's surprising. Well, why should it be actually? Alright, so that's a multi-year sort of level. And if 200 breaks, then we are looking at, are we looking at 150? Wow, that would be a very, very sweet shot. TCS, wow, beaten down on high volumes, but lots of support till about 2500, 2550. Would not be in too much of a hurry to get out of it too soon, but yeah, maybe the start of a fall, but probably will not fall a lot. Tech Mahindra, trend broken, volume up, very likely to go to 500. Vedanta, this probably go out of volume, and Nifty is going to take out some metal stocks and say, you know what, it's keeping the Nifty down. So see how it once it broke 100 Thursday, now it is suddenly at 80. That's 20% cut from already 50, 60, 70% cuts. Wipro, okay. Yes, bank. Big cut, but for it came to 600 and then good recovery. What's the low? 595, closed at 630. That is 6% recovery. Is Yes Bank putting up potential bottom in place? Too early to say, but if it does not break this low of today of 595 in the next say 2-3 weeks, then or even tomorrow day after, you could get a tradable bounce on that. There's a gap in so many, and the closure of the gap is going to present us with lots and lots of opportunities. Z 420 to 350 in about 2 weeks, and then a good recovery intraday today. No, some small gap. We'll see. All right, so that's it. So overall, what is the assessment? We definitely seem to have a sentiment-driven crash on our hands, deep correction on our hands, with fundamentals actually coming to some reasonable to cheap levels with another 10 to 20% fall. So if one is shorting, then there are two things to keep in mind. One is to look at bounces and look at them quite, what do I say, with a keen eye, because it's obviously not able to do that in prospect, but in retrospect it's so easy. Which bounce should be bought into for going long, or which bounce should be shorted for even lower levels. So that is one thing that you're going to have to look at. There are lots of gaps in the charts which are there, so we need to look at those gaps as trading opportunities. And if this fall happens, I think on each stock, or at least on the sector wise, I can't really say this on every stock, a 10 to 20% fall, remember, could bring that sector uh, and probably that stock also, if it's a nifty stock, to reasonable valuations, wherein shorting from there may not be as good an opportunity. That's another 10 to 20% down, but that number is definitely much larger for autos and pharma. As you know, they could fall a lot more, right? So broadly, that's it. Let's look at, before we close, what did uh, Dow Jones do as of now? And oh, 1% up. Wow, that is really an impressive uh, recovery on the Dow Jones, and we'll have to see how that plays out. If Dow Jones ends in the green today or tonight, that uh, uh, would really be an impressive comeback for the Dow Jones, and who knows, you might just see a very sharp recovery tomorrow. So a lot of what we discussed today from a 1 to 3 day perspective could change tonight, but I think all the other stuff we discussed from a fundamental perspective and all that, evaluations and 10-15% fall, that still definitely holds, right? So basically that's it. Are there any questions, any thoughts, any requests? Let's have them in. Highest ever volume on IOC in 10 years. All right, interesting. Does it include the OFS volume or does not include? I wouldn't know. If it is such a high volume, I would think the OFS volume is included, but I am not sure. You're talking about what? 2 million has gone to 16 million. Actually, you can go and check uh, the OFS volume and see what the volume of the OFS is. And if that's much larger than this, then obviously it doesn't add up. Hey Madhu, this is Medina. Cool. Mm, 25 crore shares. That's 250 million shares. Then yeah, this obviously is not there in this. Okay. Uh, yeah, Madhu. We're just closing up, but hopefully the recording should be up by tomorrow morning itself, and I'll send the link out. Or if I can, it takes time to upload. That's the only problem. Done. Anyone else? Anything? Any questions? Any stocks? Nope. All right, great. So we'll stop here. We'll see you in the wealth lab tomorrow, and then let's see how the market treats us and how we use it tomorrow. Right. Thank you, and good night.